For this last video of this earnings season, I'm going to focus on the king of the retailers. Now, it's not just one, there are several of them because not all retail is struggling. Who are they? Why are they the kings? What are they doing right? Let's dive right in. Okay, so the first one out the gate is one of the kings, Ulta Beauty. I do own this in my own personal portfolio, and I've owned it for a couple of years. Now, you might be wondering, why do you own this big growth stock, Tracy, when you're a value investor? Well, I like to buy the kings of their respective industries, and Ulta still remains on top. As you can see, it just has that one miss back in 2018, but since 2016, it's been pretty consistent. But the earnings meet and beat, it doesn't tell the whole story. They're still growing those same store sales comps, and it's been impressive. So, nobody's even come close to the double digits they were doing a couple of years ago, and now they seem to be still running on the good momentum with the solid single-digit growth after having those double-digit growth. And beauty is still really hot. We saw this with Estee Lauder's report, and I'm expecting a good report again from Ulta here, but we'll see if it can break out of this channel here and get to new highs or not. Okay, then switching over to one that is struggling a bit, but that's because of things happening at the mall and other situations of what their customers are looking at, and that would be American Eagle. So American Eagle is one of the top of the retail stocks, and they have a good track record of beating, as you can see. They only have two misses here in the last 5 years, and people were writing them off as dead along with the other retailers back in 2016, 2017, but they staged this huge rally here, and now they're giving up a lot of it. So how cheap is the stock? They're only trading at 10 times earnings right now, so that's pretty cheap, and they've always paid a dividend during even the dark times of 2017, and it's yielding 3.4% right now. So this is a play on the teens and the early 20-somethings, but American Eagle has been on point with most of its collections and its big push into denim. So I'm not sure why these shares are so weak here, but this could be one for value investors to take a look at. Then we're going to switch over to one of the other kings. This is Lululemon, which I also own in my own personal portfolio. Again, this is one of the growth stocks, but I like to own the names where they are basically killing it, and that's what's happening with Lulu. Now, some interesting things. They are able to meet or beat here, and they've been doing so pretty much consistently over the last 5 years, despite the problems that they had back a couple of years with the yoga pants. Now that is all in the review mirror, and they're expanding into other interesting categories, like into somewhat skincare line, and they just opened up their first restaurant here in Chicago. So I'm interested to hear how that's going, as well as their loyalty program, which they've slowly been rolling out and testing in several cities, but the loyalty program could really be a big driver going into the holiday season if they're rolling it out by then nationwide. So we will see. But Ulta, again, super strong comps or Lululemon, super strong comps just like Ulta Beauty. I keep mixing up both of them because they both are crushing it right here. So we'll see if they can keep up the momentum. Another one that some investors love to hate, but I also own in my own personal portfolio, is Restoration Hardware. Now, this chart isn't as pretty as the others. In fact, it's pretty darn volatile, but they have managed to meet or beat going back all the way to 2016 now. So there's that aspect. Now, this coming quarter, RH actually pre-recorded already, pre-announced that they were going to do better than what their original guidance had suggested. So you can see a big bounce there in the shares on that pre-announcement. We'll see if it lives up to what that was, because back in 2018, they also pre-announced, and then the stock market took a downturn, and so did their sales. So we'll see what's happening this time, because it's been a little rocky on the stock market since their pre-announcement. Once again, maybe that's like some kind of omen or something. I don't know. But Restoration Hardware, big in furniture. Also on the luxury end, which has been doing pretty well, they do have a lot of manufacturing in China, but they've been talking about how they can mitigate those tariffs, so that will be a big issue on this conference call. Shares are pretty cheap here, trading around 15 times, so we'll see if we can get a breakout here or if it will disappoint. And then we're going to finish up with one of the stocks that's basically made a round trip here, and it's had these 2 misses in a row, which hasn't helped any. At Home Group, which is like a home accessory company, with like the pillows and that kind of stuff you're buying for your house. This is now cheap. It's trading at 9 times, but out of favor again with the street here. So this will be one you want to tune in if you're looking for some values out there. What will survive on this trade war, the tariffs, and the consumer who is still holding up well here. So this is one you want to tune into if you're kind of interested in those home accessory type of companies. Okay, as you can see, we're wrapping up the earnings season, and on the retail side with a couple big kahunas and a whole bunch of other retailers that you're just going to want to watch. These are a lot of the specialty retailers like Michaels and Kirkland's and others. So be sure to check out our Twitter feeds because I'm going to be tweeting out on all of these charts until the very end of earnings season. Then I'm going to take a little break before it all starts up again. But don't miss a single episode, especially going into next earnings season, which isn't that far off. Get all of them on Zacks.com/YouTube and subscribe to our channel over on YouTube before next earnings season. And I will see you for the launch of that with the banks in a couple of weeks. But until then, be sure to tune into Twitter.